Live from Music City, Nashville, Tennessee, this is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of the beginner's class number 1, entitled The Why. Hello traders, friends, stock market enthusiasts, followers, fans from around the world. How are each and every one of you doing on this beautiful day, night, week, weekend, year, century, decade, wherever you're watching this? If you're here live, we actually are broadcasting live right now. What's going on? Type in a 1 if you can hear me and see me okay. If you're watching this from the recording, thanks so much for being here. You might have heard about real life trading through a friend, more than likely, potentially on Facebook, maybe on Twitter, on YouTube, the social media sphere. Thanks so much for being here and watching this video. I already know what you're thinking. Number 1, who's this young guy? Why is he so excited? My name is Jeremy Alexander Newsome. And in this particular class, I'm going to do something that I've been wanting to do for a very, very long time, for years in fact. I'm going to teach people of all ages how to trade the stock market. Now, tonight is only class number 1. That's actually 2. Tonight's only class number 1. There's 4 classes and they are all entirely and 100% for free. So part number 2, you might be thinking, why is it free? There's got to be a catch. What's going on? Well, Pablo Picasso, I think the quote goes something to the extent of, if you love something so much and you're passionate about it, give it away for free. Something to that extent. There's more than that though. I love teaching. In fact, if I could be a high school teacher, and if a high school teacher made about $120,000 a year and could work from anywhere they wanted to in the world with whatever schedule, and they could teach and they could be and they could live anywhere in the world they want to do, I would probably be a high school teacher. But unfortunately, as most of you would agree, I think teachers are one of those undervalued careers on the entire globe, but especially here in North America or the United States of America. That's a whole nother subject. I'm not going to go down that road right now. But I do want to say I like teaching. I love the stock market. I've been trading the stock market for about 8 years now. I'm 28 years old. I started this when I was 20, and I retired from my job when I was about 21, 22 and a half. Do people still say halves? I was about 22 when I retired from a company, and I worked down in Florida. So I'm actually up here now in Nashville, Tennessee. So I really appreciate being here. Number 3, don't let all these screens overwhelm you. I just have it there to impress people. Truly, I've had one computer and one screen for like 7 years. This is just a recent upgrade, and I figured why not maybe have some toys to play with. But honestly, don't let those impress you folks. When you're learning the stock market, when you're trading, you can accomplish so many things with just one computer and one screen. So here's what I want to do. Give me 60 minutes of your time tonight, and let me see if I can teach either you or your kid or your parents or anyone that you care about, maybe your friends. Let me see if I can teach you how the stock market works, what it is, how it moves, and of course, how you can trade it. Type in 1 if you're ready. Linderman says, I'm impressed you have a PowerPoint. Oh, thanks, man. It's a keynote, actually, but it's all the same. I do have a keynote presentation. I've built it. I hope you guys are ready. Let's get rocking and rolling. So, let me talk about why we're doing this. There's a book by Simon Sinek called The Why. And it's a great book. When I actually was reading that book about 3.5, 4 years ago, I figured out exactly what I wanted to do. And I knew that I wanted to teach. I truly love teaching. And I wanted to help people. And I figured out that if I can't be a high school teacher because of all the things that I want to do in my life, if that's just too constraining right now, how else can I help? Well, I wanted to create a company that teaches people the stock market because I went to college. I actually initially tried to get a finance degree at the University of Florida. When I say tried, I could have gotten it, but I changed my major because they don't teach anything about the stock market in college. I'm sure most of you know that. If you went to college or maybe you went to high school or middle school, whatever school you went to, you didn't learn anything about the stock market or investing or how to buy and sell shares or stocks or Forex or futures. You didn't learn any of that. You probably learned boring things like coupon yield rates or mortgage amortizations, or not that accounting's boring, but accounting's pretty boring. You probably learned things that had nothing to do with the stock market. And the stock market is the most powerful part of finance in the entire world, right? It is entirely all around us. It is part of every aspect of your life, from the food that you buy, from the place that you buy the food at, right? If you go to Walmart or Kroger or CVS or Fred's or Rite Aid or wherever else, or you buy gas or you buy clothes or you buy cars or you watch TV, the stock market is all around us. It's everywhere. It's all encompassing. And yet it's one of the things that most people know nothing about, which is mind-boggling to me. So ever since a young age, I wanted to learn this information. I'll tell you why in just a few seconds. But the why of real life trading, the reason that we're here, the reason I'm doing what I'm doing entirely for free, our mission statement is to enrich lives. And I personally know of over 5 or 6 companies that will charge over $10,000 for the exact same thing you're learning tonight and for the next 3 nights in a row. Now, what I will say about that is I am totally okay, fine, and comfortable with programs and with companies like that. It is okay. You're in business. You're there to make money. I understand how businesses work. You should make money. Enjoy. However, the people who can spend $50,000 or $10,000 or $25,000 for a stock market education program probably already know a little bit about how the stock market works, right? They probably have some kind of idea of how the market works. If you can pay that absorbent amount of money, now there are other companies out there that will charge less than that, but regardless, the reason I created Real Life Trading is because I feel that there are people, families across the world who might not be able to afford that $10,000 price tag or that $1,000 price tag or whatever it is, but they still want to learn how to trade. Right? They still want to learn about finances. They still want to learn the stock market. So that's exactly why I did this. I did it because I wanted to create a platform where people could learn and that could totally eradicate the excuse of, I don't have the money, I can't afford it. So once someone can't say that they don't have the money to do something, it's like, well, actually it's free. What's your excuse now? They start to realize, oh, wait a minute. It is just an excuse. I could just do this right now. So that's why. That's the reason that we do what we do. I love teaching. I love the stock market. I love helping people. And so all that came together. And that's why I'm doing this. So the reason that I got involved in this entire thing to begin with is from a simple movie, Forrest Gump. It's actually my favorite movie of all time. And at the age of 7, I would watch this movie for the first time. I really related to Forrest Gump because, as some of you know, I was born in rural, deep South Georgia. Now, I don't have an accent right now because I spent the last 10 years learning public speaking and learning how to not have an accent. But yes, I was born in the deep, deep South. So I really related to Forrest Gump. I was a little weird as a kid. People thought I was kind of strange. I was high energy. I was just a different human being. And I really liked the movie Forrest Gump. I totally related to it. So you remember at the very end of the movie or towards the end of the movie when he was going to his mailbox and he said, well, Lieutenant Dan invested in some kind of fruit company and apparently we didn't have to worry about money no more. And I said, good. One less thing to worry about. Right? And do you remember, obviously, the fruit company was Apple. So I asked my dad, what are you talking about? What's Forrest Gump talking about? What is a fruit company? What is investing? And my dad did the absolute best he could to explain to me what the stock market was, what Apple was, what stocks were, and how they work. So, from there, light bulb came on. I was like, oh man, Forrest Gump invested in the stock market. I want to be kind of like Forrest Gump. Because honestly, it's a great story. Right? If you haven't seen the movie, make sure to check it out. Or read the book. The book's also quite intriguing. Regardless, I wanted to do that. I wanted to invest. And so I told my dad, in fact, I begged my dad for about a year to buy stock of Apple. I said, Dad, if Forrest Gump could do it and make money, you can do it and make money. He said, son, it doesn't work that way. It's not quite that easy. It's a little bit more difficult than that. I was like, well, all right. Well, I mean, anyway, so I just begged him and begged him and begged him. And eventually I started picking blueberries. Blackberries, I'm sorry. I went around my neighborhood picking blackberries. I say neighborhood. I was out in the middle of nowhere. So I went and I picked blackberries. I would go up door to door and I had jean shorts on, no shoes, no shirt. And my sales pitch was, hi, my name is Jeremy Alexander Newsome. I picked these blackberries just for you. Here they are. They're only $1. And there was like a giant bag it's like a Ziploc bag of blackberries. And I didn't know this at the time, but I was undercutting my price severely. I could have sold each bag for like $6, and some people would have bought them easily. So for $1, I sold every single one all the time. No one said no. Plus, I was like 6.5, 7, 8 years old. So who's not going to buy from an 8-year-old with no shoes, no shirt, and selling blackberries? So anyway, I made about $700 my first summer picking blackberries, and I gave it to my dad, and I said, invest this money in Apple for me. If you're not going to do it for me. So he did it with that money, and of course he put some more money in. And you know what happened? It worked. And we made money. At a young age, at about 8 years old, I had about a net worth of about $1,600, which I felt like was a lot of money. It still is a lot of money. But it just was intriguing to me that happened, that worked, and ever since then, it has been absolutely cataclysmic for me about my excitement level for the stock market. So we all know, every single one of us here knows why we love the stock market. We know what it's about, right? It provides opportunity, it provides optimism, provides freedom to do things. That's why we all love it. That's why we're all here. That's why you're watching this video. You love the stock market. If you love the stock market, hey, I totally get it. I understand. But the fact of the matter is, there is no other opportunity out there in the world like the stock market. I love real estate. I love other parts of investing. I love growing businesses. I love when I went to college. I really liked that experience. But under no circumstances can you learn as valuable as the lessons you can in the stock market as quickly from anywhere else. That's why we love the stock market. It provides so many opportunities for you to do so many things, be so many places, achieve the results that you want to achieve. It's absolutely phenomenal. That's why we're here. That's why we do this, right? This is ease of access. With the internet and companies will continue to get faster and faster and faster and better and better and better. So 3-4 years from now, if you're watching this and you're a younger person, you're a young adult, maybe you're 13, maybe you're 14, maybe your name is Aaron, maybe your name is Zach, maybe your name is Sam. If you're here during Kids Month, thank you so much for being here, by the way. You guys absolutely rock. But the point is, you can start doing this from your phone, right? You can access the stock market from your phone anywhere in the world and invest your money from your phone. It can be done from anywhere. So if you want a job that can pay you the kind of money that you're worth, working the hours that you want to work, from wherever else in the world that you want to be, what other kind of job can do that? The answer is there's not that many. That's why we love the stock market, because it provides these type of opportunities. Deontay says, learning is real. Yes, indeed it is. So one of the quotes about the stock market is, there are more opportunities every single day in the stock market than we can take advantage of in a lifetime. That's a big takeaway. That's a huge takeaway, in fact. So if there are that many opportunities, if there's that many ways for us to make money in the stock market, how do we recognize those opportunities? If they're there, how can we visually see them? Because that's what the stock market is all about. Seeing the opportunities and then taking action. So we're going to be talking about that tonight. The meat starts right now. How do we recognize opportunities? It's called sentiment. Sentiment. Now, a big question here that you might be wondering, what in the world is sentiment? Well, let's define it. Sentiment, one second. Sentiment is the emotions that led up to the buying or selling of a security. For those who are younger, who are here right now, or maybe someone who is brand new to the stock market, the word security is the exact same word, it means the exact same thing as a stock or shares, or in some situations, equity. So all of those terms people use to make themselves feel really smart, but they're all the exact same thing, right? So a stock or a share, that's just part of a company, like Apple. So Aaron, let me ask you a question, buddy. True or false? If you bought one share of Apple, would you own a percentage of that company? And you're welcome to also type that in here if you're watching this. True or false? If you bought one share of Apple, would you own a share of that company. And everyone here can write in. Again, there's a lot of kids who are watching because this is Kids Month at Real Life Trading, March every year. And for the adults, this might be a good refresher. But the answer is true. Yes, even just one share. Now, obviously, that's a very, very small percentage. Like, in fact, if I was to tell you mathematically, it's probably 0.000000001%. It's small, but you would own share. You would actually own Apple. You would own a share of Apple. You would be an owner rather than a buyer. You would be an owner. And I'll tell you right now, ladies and gentlemen, in life and investing, it's always better to own rather than buy. Always. It's always better to own rather than buy. You'd always prefer to be an owner than a buyer. Right? For example, if you bought 100 shares of Nike, let Nike pay you to buy new shoes every year rather than you pay Nike to buy new shoes. Right? Buy shares of Nike so that they'll give you return on your money so that you can let Nike buy you your shoes for you. Always better to be an owner. So the sentiment is the emotions that led up to the buying or selling of a security. That's what sentiment is. That's how it's all about how people feel, right? Emotions. How people feel at a specific time. So we're going to pull up one of my favorite charts. Oh man. One of my favorite charts. This is the chart of silver. Ticker symbol SLV. And we're going to look at a particular price. This price on silver. So this is a chart of silver. Who would buy right here is the question. The question is, who would buy right here? Well, people who are, we're going to talk about this in just a second, people who probably are informed. People who probably know something. People who have probably looked. But at this price, notice that this particular stock has traded sideways for over 2 years. So it's not very exciting. There's nothing wonderful about it. It's pretty flat. It's not on the news. No one's talking about it. Boring. Now, who would buy right here? Much better question. Who would buy right there? Well, for those who are here, let me start by first telling you one of my biggest losses of all time. Most people who teach about the stock market, they tell you how much money you're going to make and how much money they've made, and they try to impress you by how much cash they have and how well they're doing and all that kind of good stuff. Let me start off by actually telling you what it's really like. Let me tell you the real life example. Real life? Let me tell you the real life example of silver. Who would buy there? I would. I would buy there. I hold the unofficial Guinness World Record for buying silver at its highest price of all time. It's an unofficial record. Maybe Ripley at some point will go and check my broker statement, but in 2011, I was the guy who bought silver at its highest price ever. Why? Why did I do that? Well, the answer is I was excited. What was the news stories at that point? What was happening right there? Let me give you an example. Let's go do a time hop really quick. Every news story you turned on, silver is going to go to an all-time high. Silver is the new currency of the world. Silver is incredibly valuable. For just $45, you can buy an ounce of silver. Silver is going to be taking over the world. Silver is secure. Silver is safe. Silver is a metal. Silver has been here for thousands of years. Silver, 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 silver. Every story, website, article, blog, video, Facebook post, everything's talking about silver. So what happened? It's exciting at that point. It's wonderful. The stock has already made a big move, but people are not wondering about where it went. They're thinking about how far up it could go. And it's called an excitement factor. It's called an exciting factor. So that's what happens is people who are excited, that's their sentiment. Their sentiment is they are really, really pumped up about buying because they see all of these advertisements and news stories and articles and videos and blogs and newsletters, and their friends are talking about it, and their family's talking about it, and then, oh man, I just got to get into this. I'm missing out. So they buy at the all-time high. That's what I did. It's exactly what I did. And I lost a lot of money. I believe that was my 23rd birthday. So I had started trading for only a year and a half, 2 years-ish. I didn't really know that much. In fact, I didn't know much at all. And I lost big time. So let's go back and let's say who would buy down here on silver? Well, the same people who would buy down here are the same people who bought over here when it's kind of coming down, when it's boring, when it's at a lower level, when it's not as exciting. There were tons of people who bought up here and they're just holding and holding and holding and holding, hoping that silver is going to come back. And at some point it probably will, but it's going to take a very, very long time before that actually happens. So ladies and gentlemen, this is one of the most important aspects of this entire class, honestly. It's right here. This relates to the stock market, this relates to trading, this relates to investing, but more importantly, it relates to life. And that's one of the reasons why I put that word in my company, real life trading. Trading is awesome, but life comes before trading. This is a part of life that you can live by. Not only trading, but investing, but education, but relationships, everything. There are two types of traders. You could say there's two types of people. Those with a plan and those without. Moreover, there are two types of traders. Those who are disciplined and those who are not. Consequently, there are two types of traders. Profitable and non-profitable. So if I'm breaking this down step by step. People with a plan, people who are disciplined, and people who are profitable. In life, if you come up with a plan, you say, I'm going to do this, this, and this. And then what do, Lori? Or Mr. Steve Robertson, what do? If you come up with a plan that I'm going to do X, Y, Z, and then you know what's shocking? You actually do X, Y, Z. You do what you say you're going to do, and you do it when you say you're going to do it, and you are disciplined and you keep with the plan, what usually happens? It usually works out better for you that way. You likely will become profitable if you had a specific plan. Maybe it's a business plan, maybe it's a real estate plan. But a lot of people, like me, okay, I was the poster child for horrible trading. That's another reason why I created this company, is because I know how much money I lost, and I know how many people lose money when they first start trading. So my number one focus on at real life trading is don't lose a lot of money. I'm not going to tell you about all the glorious, cool things that you can buy, all the trips that you can go on, all the cars that you can have, all the houses that you can have, all the debt that you can pay off. I'm not going to tell you about all that cool stuff. I'm going to be real with you. I'm going to tell you that it's going to take a lot of work. Okay? I'm going to tell you that risk mitigation is key, that having a plan is key. If you do not have an actual written plan with rules, the chances of you losing money in the stock market is astronomical. How do I know that? Steve, can you tell me any other profession that has no plan at all and makes a lot of money? Let's see, architects. Do architects have plans? Yeah, I think they're called blueprints. Do doctors have plans? Do doctors? Yep, doctor. What about lawyers? Do lawyers have plans? They do, right? I could talk chiropractors. I could talk about policemen and women. I could talk about teachers. I could talk about engineers, electricians, professional football players. Okay? Well, not even football players, just professional people in sports. If you're making money playing sports, you have a plan. Okay? If you're a coach, you have a plan. Anyone in life who's making money has a plan of some kind. Everyone. If they're making money, they have a plan. So if you trade the stock market without a plan, there's a very, very good chance you're going to lose money. And I don't want that to happen to you. So I'm going to teach you how to build a plan. Sounds crazy, I know. Question you're going to be wondering is, how much is that going to cost? $0. That's going to be class 4 though. So stick around, okay? So here's some time frames. Again, I want to be realistic with you. I want to let you know, if you're here for the very first time, this is your first experience with real life trading, you're watching this video for the first or for the 5th time, doesn't matter. I want to give you an idea of how long it kind of takes to implement and to learn some of this information. Trading stock, easiest thing that can be done on the stock market. Now I say easy with an asterisk. I have the saying that the stock market is very easy and simple, but difficult. Okay, let me give you an example. Walking. Is walking easy? For the vast majority of people, it is. Okay? Or if you're unable to walk and you have to be in a wheelchair, being in a wheelchair is pretty easy. And I can say that truly because I was in a wheelchair for 6 months of my life. I broke both of my legs. at the age of 13. So I was in a wheelchair for a long time. So if you can't physically walk, if you're in a wheelchair, it's easy to be in a wheelchair, or it's easy just to walk 100 feet. Okay, we can agree with that. It's not that hard. What about walking 1,000 miles? Does that become more difficult? Obviously, right? So walking is simple. Walking very far, difficult. Trading the stock market, simple. Trading the stock market profitably, difficult, right? So it takes about a few weeks to months to really learn how to trade stock. I personally think I can teach someone in 4 hours, which we're trying to think mathematically, but anyway, we're about 10% into that right now. So we're getting there. We're almost already finished. So I'm going to teach you in weeks to months or in even hours how to trade stock. And then trading stocks using options as leverage is what most people learn after that. That can take weeks to months to learn. And then non-directional option trading, which is things like credit spreads and put sales, that can take months to a year. Directional options like calls and puts can take months to a year. And then profitably day trading options can take usually takes over a year plus. Now, those numbers, for some reason, scare people when it comes to the stock market. Because a lot of people, when they come to the stock market, what kind of thoughts do they have, Joshua? I mean, honestly, most people that come to the stock market think they're going to do what? They think they're going to make a lot of money immediately. So to you, I say, who is watching this thinking, a year? I'll make money tomorrow. All right, well, here's the deal. Can you right now go out and play a professional sport and get paid for it? Maybe there's probably a very select few people who can. And I'd say to that is, if you have a lot of money playing professional sports, email me before you start trading. Let's talk something over. Okay. Let's discuss some things before you start throwing millions into the stock market for the first time. But for most of us, I can't just go out and play a professional sport and get paid. Any sport, soccer, football, hockey, I'm terrible at all sports. The reason I'm saying that is, if you're going to become a doctor and make money, how long is it going to take? Doctors, throw some numbers out there for me. How long were you in school? What, about at least 8 years, give or take? And then you have debts and things like that you have to take care of. But let's just say at least minimum 8 years to be a doctor. Lawyer, what about a lawyer? I mean, 6 to 8 years-ish, approximately. Dentist. I have a great friend who's a dentist. How long is that going to take? 4 to 6-ish. What about a pilot? I have a few real-life traders who are pilot. Again, probably 4 to 6. These are not months. These are years. Okay. What about just going to college and getting a business degree? How long is that going to take? 2 to 4 years. It's still going to take time. So you got to think about it is if you're willing to learn something, there's nothing in life that you are able to do quickly that's worth doing. Everything in life that's going to pay you, that you're going to benefit from in a big way, takes a lot of work. Everything. The stock market, relationships, right? Anyone who's been in a relationship more than a year, first 3 months are the easiest part in the world. After that, right, there comes time where you struggle. Type in a 1 if you've been married more than 10 years. I'm not typing in a 1 because I haven't. I'm just saying, for those who have been married more than a year, type in a 1. All right, so we got a few 1s. Congratulations, truly. So I think there was a famous person, preacher Joel Osteen, whose quote is, I've been married over 20 years and I've never contemplated divorce, but I've thought about murder a lot. Right? So all I'm getting at is, anytime you're in a relationship for any serious amount of time, there comes a part where you have to work at it. You have to try. You have to. What's that word called? Compromise. Right? There comes a time when you have to compromise and talk through things. I'm only saying that because everything that's actually worth anything, everything that has a big benefit at the end, it can be school, it can be sports, it can be stocks, it can be investing. It's going to take work. It's going to take time. I can get you there faster than anyone else, though. I will say that. Yes, it's going to take time, but I can get you there faster than anyone else. But you know why? Because I'm going to keep it simple. If we can't do the small, simple, easy things right, then it's going to be very, very hard for us to try the more complex items. In fact, let me go back just one. Let me go back a slide. And the reason I'm going to bring that up again, one other thing is most traders hop right into this because you make the most money. Folks, if you're here or here or here, if you're doing one of these strategies and you're not making money, try this one first. Okay? If you can't do the easiest thing right, I mean, trading stock in the stock market is the easiest thing you can do. I mean, you have to agree with me. There's no other thing to do in the stock market that's easier than that. Other than not doing anything, like just sitting in cash, buying and selling stock is the lowest level that you can go. There's nothing else. You either buy or you sell. You know, that's really it. You buy or you sell. There's nothing else that really can be done. So if you are one of the other parts in this pyramid thing and you're not making money, you probably should try just trading stocks. See if you can make money doing that. Because that's the easiest part of all of it. So let's keep it simple. Technical analysis, what is it? I'm about to teach you. Technical analysis is the visual study of human behavior, emotions, and sentiment as it's reflected and interpreted on a price chart. Some big words in there. We've already covered emotions and sentiment. Emotion, sentiment, behavior, they mean the same thing. Visual study, what does that mean? We're looking at it with our eyes. As it's reflected and interpreted on a price chart, we're going to get to that in about 60 seconds. Okay? We're going to talk about exactly what that is. But bottom line, for the vast majority of us here, would you ever buy a house without looking at it first? You're looking at something. You're looking at either price, location, or the house itself. Let me try to draw a house. Right? If you're buying a house, you're looking at one of those three things. Would you guys agree? You're looking at it. Your eyes are physically visualizing something. Either how much does it cost, or where is it at, or what does it look like? You've got to look at one of these three things before you buy a house. I mean, you have to. So that's why we have to look at that with a stock chart. So let's kind of talk about that here for a second. There are, these are the main types of charts. The main types of charts are, you have a line chart, bar chart, candlestick chart, and point and figure chart. There's 4 main charts that people use in the stock market. Now, there are more, but these are the 4 main ones. So it's almost kind of like if I said out there, the 4 main types of shoes. Can you guys name the 4 main types of shoes? Right? Nike, Adidas, Skechers. What's another type of shoe? Nike, Adidas, probably Under Armour. Maybe there's probably 3 or 4 more. But you guys get the idea, right? Reebok. So there's, 4 main types of charts. There's more, but you have the biggest ones. This right here, this candlestick chart, right? There's 4. This is the Nike of all these. Okay. So 90% of our focus will be on the candlestick chart. It's going to be 90% of our focus. Now, some of you might be thinking, I don't know what candlesticks are. Well, I know a cool place that'll teach you totally for free. So that's what technical analysis is. If you've ever heard the term fundamental analysis is also great, especially for longer term stuff. But fundamental analysis is the part is used for longer term trades, and it's focused on the actual money. How much money do those companies make? That's pretty much it. More or less, that's what fundamental analysis is. So let's go look at a line chart. This is a line chart right here of a company called IBM, International Business Machines. They're a pretty big company. They've been around for a bit. So this is a line chart. It shows the closing price of each period. This is a daily chart. So excluding the holidays, the United States stock market closes at 4 p.m. Eastern. 4 p.m. Eastern. So every day at 4 p.m., IBM will close at a certain price, and that price gets plotted here on the line chart. So therefore, each day it's automatically printed. So that's what a line chart looks like. And line charts are good for you to easily, quickly and fast are pretty much the same thing. Quickly to determine the direction of a trend. So for example, this little move right here, it's going up. This move right here, going sideways. And I know it's like, well, Jeremy, that's pretty simple. It really is that simple. I know that because I teach kids this stuff, 4th grade, 3rd grade. I had a 4th grade class the other day drawing support and resistance lines on Apple like it was their job. So it is kind of that simple, right? Keep it simple. KISS, keep it simple. So that's a line chart. So let's talk about this line chart for just a second here. What caused the stock price to stop moving at these prices, at these levels? What caused that stock price to stop moving? So when I say stop moving, it was going down, and then boop, it stopped. And then bounced, and then went down, 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 and then boop, it bounced. And then did it again right here, down, 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 down. I mean, look at this. It bounced at the exact same price in 2009 as it bounced in 2005 and 2006. Why would that happen? Why would that happen? Sentiment. Sentiment, that's why. Let's answer this question really quick. Based on this line chart, if someone bought here, did they make money? Yes. Okay. So Keith, let me ask you a question, man. You're typing in the chat pane. So Keith, if you did something once and made money, would you do it again? Sure you would. Why wouldn't you? It's like, hey, I made money doing that. I'm going to do it again. All right. So if you bought here, again, same exact price that you bought before, did you make money? Yes, you did. Okay. So if you did something twice and you made money, would you do it a third time? Yes, you would. Why? I mean, why not? Keep doing it until it doesn't work. Or just keep doing it in general. So the reason the stock price stopped moving, we'll talk about that in just a second, but it's sentiment. If someone does something once and it works, they will do it again, and they will do it again, and they will do it again. If it keeps working, they're going to keep doing it. Why not? If it gives you a good emotion, and if you like it, that's human emotion, right? Remember, we're trading. We're learning to trade human emotion. So if someone does something once and they make money, they're going to do it again and again and again. So at this level, what caused the stock to stop moving? Again, sentiment. We're going to be talking about what kind of sentiment in just a moment. But as the stock traded up, right, it traded right back down. As the stock traded up, it traded right back down. So what happened is when Keith, I'm going to use you for a moment, Keith. Here's Keith right here, ladies and gentlemen. So if Keith bought there and sold there before and made money, would he do it again? Yes, he would. Yes, he would. Again, if you can buy and sell stocks and you realize that there's a pattern to it, even if you've never traded before, you're going to repeat that pattern over and over and over. So you can see that these are literal visual representations of where a stock has stopped doing something. It has either gone up or gone down or paused. But these are patterns, these are prices that can be drawn and visually interpreted. You can literally see, and you draw a line on here, this price right here on IBM acted as a ceiling or a resistance for a very, very long time. So we're going to be talking about that starting right now. So if we're looking at this particular level on IBM, this price right here and this price right here, there are two terms used for stock analysis that are very, very crucial. These are two of the biggest words you can use or learn in your career as an investor or a stock trader or someone who likes the stock market. This is something that you can use if you're 9 years old or 99 years old, in college or about to graduate or haven't gotten in, or you could be in middle school. You'd be 9 probably, middle school, kindergarten. Anyway, you can learn this information, and this part of analysis right here can be carried with you for the rest of your life. If you learn support and resistance, that piece alone can help you massively figure out the timing of when to buy and sell something, whatever it is. It could be anything. You can use this information for houses. You can use this information for businesses, for cars, or anything. So resistance and support. There's also another term that some of you might hear, supply and demand. So resistance equals supply. It's the same thing. It's the same term. Type in a 1 if you remember hearing of demand and supply in high school or in middle school in your economics class. So they were so close to teaching you the stock market, you just didn't quite know it. They were so close. They were on the verge of teaching the stock market had they just taught you the stocks instead of corn prices or something. So close, but supply and demand, right? So just for those who didn't type in a 1, because there's only about 10 of you who typed in some 1s, so let's just go review. Let's say that a company called Sony makes PlayStations, okay? And they're going to create a PlayStation 6. I don't even know what version they're on right now. I probably think 5, 4. So they're going to make a PlayStation 6. This brand new. People demand it. They want it. That's what demand means. Demand means they want something. I want this. I demand it. So they want it. Drives up the price. People buy. So what does Sony do? If a lot of people are demanding something, Sony's going to make more of them. It's that simple. If a lot of people want something, the company's going to make more of that something, whatever it might be. So as they make, let's just say 1,000 units, 1,000 PlayStations, Sony gets up here, and now they have 1,000 PlayStations, and no one is demanding them anymore. Not as many people want them. So Aaron, what would you do, buddy, if you had 1,000 PlayStations and no one's buying them? What would you do? Drop the price. So if you're charging $600 and you drop the price to $300, are you going to start finding buyers? The answer is yeah, of course. So at some point, the price goes up and up and up and up and up, and you sell less and less and less and less of something. So that's what happens here in the stock market. The higher the stock market goes, the more people have of something. So in order to find buyers, the stock goes down to find buyers as the price exceeds demand. People no longer demand the stock at a certain price if the stock goes down. I'll say that one more time. If people do not demand the stock, if they no longer want that stock or that company at that price, the price will go down in order to find people who do want it at a price. And that price, that is supply and demand, support and resistance. So resistance / supply is where more selling pressure builds than buying pressure. Traders often have a comfort aspect of selling at resistance, causing the stock to go down. Support, aka demand, is where the optimism is the highest. This is where people demand more shares, and buying pressure is greater than selling pressure, causing the stock to go up. For example, here's a pretty good example, I think. All right, so let's say, ladies and gentlemen, this is a hypothetical example, but I'm bringing back the Corolla. Let's say I have a 2016 silver Corolla with 30,000 miles on it, and I want to sell it for $50,000. Who's going to buy it? Anybody? Now, this is a mint condition 2016. It has 4 wheels, AM and FM radio, cloth seats, aluminum alloy wheels. Only $30,000 for $50,000. Who's buying it? No one's buying it. Okay. Fair. Ron Buckley says, AM and FM. You know it. AM and FM radio all day. All right. So instead of $50,000, what if I put it at $6,000? Does anybody want it now? All right. Keith says, sold. There we go. So all I did, ladies and gentlemen, is I dropped the price. Same item, dropped the price, more buyers. It works that way for everything. It works that way for stocks. It works that way for houses. It works that way for businesses. It works that way for Happy Meals and McDonald's. It works that way for, when I say everything, in a philosophical term, just about everything, okay? So if a stock is high, people are going to be selling it and the market is going to be looking for people to buy it at a lower price when the stock trades down. I mean, look at how just beautiful that moves on IBM. That is gorgeous, gorgeous, gorgeous. Okay. So our goal, here it is. So you've been with me now for 45 minutes. We got about 15 minutes left. Our goal is to simply find stocks bouncing off of support, buy them, and place our stop accordingly. That is our goal as traders. Now, I know that sounds very simple, but what if that's all you do? What if that's all you focus on? You find stocks, you draw support, and you buy them when they're bouncing off of support. The term you've often heard is buy low, sell high. My friends, you've probably heard this phrase before, but this is one of the most famous phrases in all of investing. This is it right here. This is the number one, the golden rule, if you will. Probably, at least one of them. Buy low, sell high. Buy low, sell high. Buy low, sell high. Repeat that pretty often. Because I most certainly did not do that when I traded silver. Right? Remember, on silver, I bought up here. I did not buy down there. So buy low, sell high. That's the goal. That's the objective. That's what you want to do. So when you're buying low, selling high, there's a phrase that you're going to hear me say all the time as you're here at Real Life Trading more and more, buy the bounce. I've been saying that for a long time. It's a very easy thing to remember. Buy the bounce means when a stock is coming down, support works because of the traders who bought at that location in the past. If they made money once, they will repeat the process. So you're looking for an opportunity to buy the bounce. What's going to happen is you're going to say mentally, all right, Jeremy, what does a bounce look like? If you say to me that it is that simple and it is that easy, how can I find one of these situations? Because this part of the strategy, if you really do not overcomplicate it, is incredibly easy. The challenge with most traders is simply doing what? Waiting. That's the challenge. The challenge, my friends, and I spell this incorrectly for a reason, is being patient. That's the hardest part about trading. That's the hardest part about investing. That's the hardest part about the stock market. That's the hardest part about life. Being patient. Someone said patience is a virtue. I don't remember where that is, but pretty popular saying. So if you want to get paid, be patient. All right, right, Aaron? If you want to get paid, be patient with a P-A-Y. Get paid to be patient, my friends. So don't overwhelm yourself. It's going to be very easy to get caught up in all kinds of indicators and signals. Just keep it simple, smarty is the term that I use. So let's go look for some examples, all right? I'm going to go find some stocks that you are all very, very familiar with. Let's go look at a company called Apple. I think you've all heard the term Apple before. I'm going to hide all my lines. And I'm just going to zoom out here for just a second. I'm going to make this as painfully easy as I can. All right. So what we're going to want to do is we're going to want to look for a location and a price where the stock stopped moving. So let's go look at that together right now. Dennis said the fruit company. Exactly. This is the one that started it for me, by the way, folks. All the way back in 1995, 96, somewhere right around there. So what I'm going to do is we're going to look for prices where the stock stopped moving. The first one that I see is right here. That's the first one that I see. The second one that I see is right there. I can probably move that up a little bit. Let me do that one more time. Here's the second price that I see. Here's another price that I see right now. Let's just do those three lines for this second. Let's do these three lines for the second. So this price right here is the previous all-time high on Apple. Previous all-time high. So Aaron or Dennis or Tim or Lori or Frank, George, Tiffany, Greg, did the stock stop moving at that particular time? Yes or no? Yes, it did. It stopped moving. So if it stopped moving, you can create a line there. You can draw a price, and that line will be useful for the future. And I'm going to prove it to you in just a moment. So that particular price, here's another one where the stock stops moving. Very obvious locations. And you'll see that this was once a resistance, right? That's where the stock stopped moving at price, ended up becoming a support in the future. So think about it like this. There's a term called old resistance equals new support. So the term is old resistance, new support. So think about it like this. If an old resistance is once a ceiling, think about it like a ceiling to your house, right? If you jump and hit your head on the ceiling, it's not going to let you up. But is there any way that you can get above your ceiling? Yeah, it's called your attic, right? So if you walk into your attic, the once was the ceiling is now the floor. So that's the way it works. Old resistance can become new support. So once a stock breaks past that level, you'll notice right here it came back, old resistance acted as new support, and it bounced oh so beautifully. Now what some of you might say here while you're looking at this is, Jeremy, that's great and all, but you're looking at that information years ago. Right? If you look back down here, that's 2014, 2015, 2013. I agree. So let's talk about right now. Right this exact second, today. We're looking at Apple. Is there any support level that was once a resistance that we might be able to use in order to visually determine where we could buy Apple shares? Type in a 1 if you can see it. Is there any place based on prior information, based on a price where the stock stopped moving, that we could potentially use as a price to buy Apple? A visual representation. I'm getting a lot of 1s, which is fantastic. Ladies and gentlemen, I'm going to draw it for you, and I'm going to use the color red. Here it is. This is the breakthrough, and I've had a lot of kids have this breakthrough because, again, every March at Real Life Trading, my mission is to go teach kids this information and to see their faces light up with realistically how easy it can become. Because remember, kids have no concept of time. So they're cool buying stock and holding it for a long time, right? 10 years. All right, whatever, cool. So what if this stock pulls back down? I have a question. Could we buy it right here? Yes or no? Could we buy it? And the answer is simple. Yeah, sure we could. Absolutely. So what we're doing is we can look at this chart and we can visually see that right now is not the time to buy Apple. Why? Because it's not at a low level. It's not at a buy low, sell high price right now. So you can look at the chart and you can visually see, you can determine old resistance, new support. So what that'll do is it will save you time and money. Okay, the money will be, instead of buying here, you could buy at a discount when Apple pulls back to that price. So it saves you money, it saves you time, it saves you stress. What's the skill, what's the virtue that's required to wait for Apple to actually pull back to that point? Dina, what do you think? What's the virtue? You absolutely nailed it. High five, Dina. Well done. She said patience. Absolutely. So that's the virtue of waiting. Is right. We can all say, oh yeah, sure, we'll just buy it right there. The virtue of waiting is the patience part. That's the hardest part. But if you can wait, you can be patient, you can get a great price to buy something. That's key. And the more you do this, the more that you'll see that Apple has a lot of patterns. You guys want to see, type in a 3 if you want to see one of the most profitable patterns I've ever played in my entire life on Apple recently. And most of my traders who trade with me from time to time saw this happen and were still crushing it. Here it is. I'm going to draw the pattern. Stock goes up, has a big drop, makes a new high, absolutely gets destroyed, makes a low, comes up to a high, makes an equal low, and then goes to the moon. Ready for this? I'm going to draw that exact same pattern for you right now. Stock goes higher, has a pullback, makes another high, giant Tanksville, just gets shredded. Has a low, comes up, makes another low, goes to the moon. So, now I know right now it's easy for me to say, oh, but I was planning on getting in back then. I really, really was. I mean, truly. We've been buying Apple since about $95 a share because of two reasons. Reason number one, you have this old resistance right here. Old resistance, new support. So it makes sense that it was bouncing at that price. Makes sense. And number two, you have this pattern down here that I'll be teaching you guys in very future classes called a double bottom. That double bottom class looks like that. Now, I'm not going to tell you that we bought right here because we didn't. And I'm not going to tell you that we bought right there because we didn't. But there was a lot of traders, and including one guy that you all heard of, and this is a fact at this point. You probably all heard of him. WB, Warren Buffett. He bought Apple right there. He bought Apple right there, back at 93-ish a share. So I got in about a day or two after Warren Buffett got in. Not because I'm like, oh, Warren Buffett bought there, I'm going to make money. It really wasn't that at all. It was the chart pattern. I was being able to see that this old resistance is a new support, and we waited for this stock to come down. Did we try getting in bullish before at some time? Yes, we did. Right? We absolutely tried getting in here, and actually we made a little bit of money at that bounce. We tried getting in here, lost some, snagged a little bit of gains here, lost some down here, and then we made up for it right there. So back sometime last year, I made the claim that Apple was going to go to 150. So I still have until September of 2017. Now let me turn that line on to this little pink line. This pink line on my screen, that is the wager line. And there's a lot of people that know about that. So what I'm expecting Apple to do from here is this and this. That's what I'm expecting it to do. I think we are in the phase of this right there, right? Strong bullish move, get that pullback, consolidate, and then continue higher. That's where I think we're at in the scheme of things. All that does is take a little bit of practice. Now let's go find another one. Let's go find Whole Foods, ticker symbol WFM. Most of you probably know what Whole Foods is. I'm gonna zoom out on Whole Foods. I'm gonna hide all my lines here for a second. And let me zoom out. And let's see if we can visually look at and determine prices where Whole Foods may or may not have bounced before in the past. Type in a 2 if you can see them. Very, very disciplined stock. I'm going to draw them for you. Here's one right there. Here's one right there. Here's one right there. Those are the most recent 3. So look at how well Whole Foods moved in this area right here. I mean, just over and over. So what if Whole Foods trades down to this price? What do you guys think? Could we have an idea, a perception, a thought, a visual or interpretation of what we could possibly do? Could we figure it out? Visually. The answer is, yes, we can. We could figure out what to do and where. And that, my friend, is powerful. That is very, very powerful. I'm not saying that you're going to be right. I'm not saying you're going to make millions and millions of dollars on that trade. But what I am saying is at least you will do something that very, very few people do. At least you will take the time to create something called a plan. If you can create a plan in trading, you can create a plan in investing, you can create a plan in relationships or in business or whatever, you can be successful. You can be profitable. You can make money. You can do the things that you want to do. If you can just do that and then follow it, you'll be massively successful. You'll be able to achieve anything you want to achieve if you're able to create a plan and simply follow it. We are almost done, minutes away from getting totally wrapped up. So the way the bounce works, all right, stock is trading to a support like Whole Foods. I'm going to give you another example in just a second. you have a black bearish candle appear. Now I know a lot of you are like, Jeremy, I don't know what a candle is yet. We're going to talk about that in the future. Okay, the following candle is a nice white bullish candle. That's what a bounce looks like. We're going to learn many candlestick patterns in future classes, but we're going to focus on just one singular item right now. We're going to make it as simple as possible. There are thousands of patterns out there, thousands of stocks, thousands of strategies. I'm going to give you one. If you can make money with this, which is my favorite strategy out there, my favorite candlestick pattern out there, you can at least have a leg up on how you are trading. So the candlestick pattern is called a one white soldier. Steve, you nailed it. Absolutely. So if you're buying at support, waiting for that confirmation, this is it. Right? This is your confirmation. You have a one white soldier candle pattern. Let's say your line is right there. Let's say that you had drawn a line and it's your purple line right there. Stock is trading sideways or has been going down for at least 1 week in a bearish trend. A black candle appears. Once that black candle appears, that's the selling candle. Then you get a white candle forms. And here's what's important to understand. The white candle opens and closes above the close of the prior candle. So we're going to talk a lot about candlesticks in the future. If you can't wait any longer and you're like, I want to get in some candlestick action, go to a really cool website. You might have heard of it before, but it's called reallifetrading.com. If you go to reallifetrading.com, this is where you are right now. This is the beginners tab and you're watching this video. Simply scroll up under articles, go to classes and click on candlestick ebook right there. Click on candlesticks and this will pop up and it's entirely free. A lot of companies will charge $10 for this, $19, $100, $200. It's totally free. I teach you about red and green, black and white. I teach you about all the colors. So you click on that. If you just can't take it anymore and you want to watch this immediately, hey, go for it. All yours. But the one white soldier candle pattern is a very, very strong pattern. It's one of my favorites. I absolutely love it. And it's pretty easily identifiable. This is how you get in. A lot of people tell you about the candle pattern, but they don't actually tell you how to apply it. So once you find a one white soldier candlestick pattern, if you have a support demand price, you find the candle and you simply enter above the high and you place your stop below the low. This is a very, very important part. It's so important, in fact, we're going to be talking about it in class 2. Notice this word stop. Imagine a world with no roundabouts or no stop signs or no red lights. There would be a lot of traffic accidents. What I want to do is make sure that each and every one of you avoid a traffic accident in your trading or investing careers. So we're going to go look for these patterns in about 120 seconds. But that's exactly how you play it. You look for the candlestick pattern, add a support or resistance, and that's at least when you know, when you have a visual interpretation, that there's a high chance and a high probability that the stock will bounce. I'm going to go to another company that some of you have probably heard of before. We're going to go look at McDonald's. Let's go look at Mickey D's. And what I'm going to do is I'm going to create a few prices here on McDonald's. And then I want you guys, I don't have a poll available, but I'll try to make one in a second, maybe. So this is the stock of McDonald's. Okay, I'm going to draw some support and resistance lines, and I'm going to let you guys kind of vote. I probably should have a poll. Probably be easier that way. Let me scoot this up to here. All right. And I know I'm going to be using past information, but that's okay. That's how you learn this stuff. And that's really about it. So these 3 patterns. So I'm going to give you, let's do 2 arrows. Which arrow do you want to go investigate? The red arrow or the black arrow? I'm going to let you guys choose. I'm going to go look at one of those prices and see if there's a one white soldier there. I'm going to show you what it looks like, show you how you would have entered. All right, red's first. Anybody else? We got one red. We got one black, so we're 50-50. We got a red. Got a black. We're tied. Black. Oh, black took the lead. There's another black. All right, black's the winner. All right, let's go check out the black candle. Or the black arrow. Let's go look at that one. So what I'm going to do is I'm going to zoom in here. I'm going to turn my candlestick chart on. And I promise I did not set up this example in advance, so you just got to trust me on that. Because it doesn't matter. They're everywhere. These candlestick patterns are everywhere. In fact, this candlestick pattern that we're looking at, this was the black arrow right here. This is actually 2 patterns you're going to learn about at Real Life Trading, all for free. Ladies and gentlemen, I'm going to circle it for you, and then I want you to type in a 1 because that's very impressive. The exact arrow that you guys picked, there's the one white soldier right there. How cool is that? Boom! Give me some. Right? That is awesome. I mean, a random stock. I can do this again. I can do this all day. I can pick random stocks, find support and resistances, and show you guys one white soldier patterns. It happens all the time. Very, very frequent things. Now I'm looking at this with a trained eye. I can see like 16 different one white soldier candle patterns. Okay, that's one of them. That's the strongest one. But here's what's most important. If you were looking at where to buy McDonald's, this signal would have at least given you the idea of where to get in and why. And that is key. So if your entry was here and your stop was right here, or let's just say your entry was right there, that's how you would have set up the trade based on what we just talked about. Very, very cool stuff. I love it. So here's some fun facts and some rules. We're going to be talking about the opens and closes in the future. But rule is it needs to open and close above the prior day's close. So if this black candle here closes, this is the close of the black candle right there. The open of the next candle is right there. So it needs that to happen. It needs to open and close above the prior day's close. It needs to follow a black or bearish candle, which could also be a red candle. It needs to follow that. Has to. Here's some fun facts. Some fun facts about one white soldiers. It can be a long day bullish candle. It's awesome if the volume increases on this candle. It's great if it closes above and takes out the prior day's high. That makes it even stronger. It's super if the prior day black candle closed below your support line. Right, so again, if you had a support line right here, let's say this red line, and then the candle closes below that, right, and then the stock pops and breaks through, that's even better. The best way to learn candlestick patterns, in my personal opinion, is to make flashcards of them. If you want to get bonus credit, do some flashcards of these candlestick patterns. And again, there's a lot of candlestick patterns. I have a lot of information all for free on the website about candlestick patterns. You can get here at everything you know about candlesticks. You can also click on the article tab of Real Life Trading and type in candlestick cheat sheet, and I believe something still comes up. There we go. Real Life Trading candlestick cheat sheet. You can print that out. Here they are. They're color coded. Green is bullish, red is bearish, and here they all are. Right, so you can print that out. There's also numerous stuff on our YouTube channel. We'll talk about that in just a little bit. But the point is, ladies and gentlemen, if you're excited about this, I'm leaving a little bit of details because I want to make sure you're going to continue. And again, there's no sales pitches going forward, right? Don't worry about that. Take a deep breath, relax. I'm not asking for your money. I want you to learn this stuff. So I'm going to see if you're going to really learn it. So yeah, if you want to learn candles, if you want to get more information about this, there's plenty of it ahead of you. I know this stuff is really, really exciting. I know this went by very quickly. We're going to be done in just a few minutes. I know how excited you are and how pumped up you are. What I do not want you to do is lose a lot of money. Please take class 2. I lost a lot of money because I did not learn, use, understand, appreciate, or plan for risk. Please take number 2. If you don't do anything else, at least learn that class. Again, it's free. There is zero sales pitch in that class. In fact, if you're watching it right now, if you're watching the video, so here's the website. Again, reallifetrading.com. Here's the classes. Here's where you are. Class number 2 is risk management. Take that class. I do not want you to lose a bunch of money. I'm going to show you mathematically how you can still buy low, sell high, buy all support, one white soldier candles, all that cool stuff. I'm just going to teach you mathematically how not to lose money because it's incredibly important. I have a video on YouTube called How to Lose $1 Million in the Stock Market. I'm the only guy who has that video because I care about losing. Warren Buffett says, rule number 1 in trading, don't lose money. Rule number 2, see rule number 1, right? Don't lose money. Don't lose money. It's important not to do that. So that's the important thing. That's what I want to really say. So here's some action steps from here, ladies and gentlemen. Number 1, tell everyone you know about real life trading. Okay? That's what I want you guys to do. Tell everyone you can about us. We're free, we're fun, educational, and of course we're enriching. If you want to learn how to trade the stock market, you found the quickest path of least resistance to your goal. If you have friends who want to learn this, or you think they should, just tell them about us. We have a lot of social media outlets that we would love for you to take advantage of. If we hop over here onto the computer really quick, we are on YouTube. I would love for you to hop over to our YouTube channel and subscribe to our YouTube channel. We produce at least 3 videos every single week that they're entirely free and they're mind-blowing. They're some of the best videos on the internet and they're free 3 times a week. We also have a Twitter, right? You can follow me at Newsome Nuggets. If you're a Twitter person, feel free to do that. If you're a Facebook person, we're also on Facebook, Real Life Trading. You can get to our Facebook page, and I'm also on LinkedIn. So I'm on all the social medias if you want to reach out to me. My goal is to help you. I know what you're thinking. There is 0 chance this guy actually wants to hear from me and help me on my journey. That is incorrect, right? I give my personal cell phone number on my website. Most of the traders who trade with me day to day have my personal cell phone and we text often. I know you're thinking that I'm making this up, but I'm not, okay? I care about your success. Remember, I'm a teacher. I do this because I want to, not because I have to. And how am I proving that to you? I'm not asking for your money. I want to teach you. I actually care. So I want to help. So from here on, tell your friends, subscribe to our YouTube channel, follow me on Twitter, LinkedIn, YouTube, Facebook, all the social media stuff. I don't do a Snapchat, or well, I could, but whatever. Here's the website. What we're going to be doing is the next class is going to be class number 2, then class number 3, the tools, where we talk about brokers, and then class number 4, I'm going to build you your trading plan. Okay, I'm going to build you your plan for you. Be in that class, instrumentally important. And if you're watching this as a recording, you're like, man, this stuff is awesome. Just fly to the next one. Go to class 2, 3, 4, then go to the intermediate trading where I really blow your mind. These 4 classes have been voted some of the best classes on the internet about trading the stock market actively. They're incredible because the classes are made not by me. They're made by you guys. You guys being here, asking great questions, putting forth phenomenal energy, really trying to pick my brain so I can make sure I give you the best details possible. I'm here for you, ladies and gentlemen. So thank you so much for being here. It means a lot. I'm going to open it up for 2 minutes of questions and answers. If anyone have any questions for me who are here live, if you're watching this on the recording, you're good to go unless you want to stick around. You're absolutely awesome. Ron says, thank you. You're a great teacher. I appreciate that, Ron. It means a lot, man, especially coming from you, buddy. Peter says, you were awesome. Thank you, Peter. I appreciate that. John says, you the man, Jeremy. You the man, John. Anytime, man. Anytime. John Padgett, thank you. Deontay says, thanks for everything. Glad I could make class. Yeah, you're absolutely welcome. Ron says, thanks so much. Laura says, thanks. Awesome class. You're absolutely welcome, folks. My pleasure. Dina says, thanks so much. God bless you too. Thanks for being here. You're incredible. Awesome. Well, again, pretty easy stuff. I know. Catherine says, when is class 2? Phenomenal question. For those who are live, class 2 is tomorrow, 8 p.m. Eastern time. Link will be emailed out to you tomorrow. You can also find it in this YouTube video. If you're watching this on the recording, this video probably will not be here anymore. But if you come here, you can click on the new beginners classes. I'll put this in the chat pane for you. There they are, ladies and gentlemen. All right, there's my giant head. Fills up the entire screen. Watch that video. All the links are in the comment section below. Again, if you're watching this on the recording, they're probably not there anymore. These classes are probably already created. Just go to the website, watch them there, and let me know if you have any questions. My email is jerremy@reallifetraining.com. Email me. Here's my challenge to you. See if I reply in 48 hours. Okay? I'm going to reply quicker, better, faster, more efficiently, more effectively, with more care and more generosity than any other teacher out there. That is my guarantee. I'm going to teach the stock market, ladies and gentlemen. In fact, I'm going to teach the entire world this stuff for free. We have so much content on this website. It is insane. And we're going to change the stock market industry together. Ladies and gentlemen, thanks so much for watching. You guys absolutely rock. I'll see you in class 2. And until next time, remember, love life, live life, and trade it. You guys rock.